All right, what's up, everybody? Welcome back to the channel. So Bitcoin, as you can see, has done nothing for a lot of days. Actually, since we made this move right here, we've been trading inside of that daily range for quite a while now. And it's actually getting quite boring because, we're trading within the same prices almost every single day now. Today is like day number 12. Where we've been in the same row. You can see down here on the RSI, we have been under 50, so that is typically a bearish signal. Basically been bouncing in between having that bearish signal and being all out bearish, because, generally under 40, not only are you bearish, you have a lot of bearish momentum. So we have a bearish signal on Bitcoin and have had a bearish signal for a while, but the bears have just not been able to get anything going to the downside. Now, with that being said, obviously the buyers have not been able to get anything going either, as Bitcoin is just liquidating range highs back down to range lows and staying very, very tightly compressed. Whenever price does this, especially for this long, you start to get a compression, and that compression will have a volatile breakout, either to the upside or to the downside or both. So you have to be careful with that if you are trading the intra-week and intra-day ranges. Just make sure that you are using good risk management moving forward. On the daily time frame, the Bollinger Band really is not showing us that volatility compression just yet. We can look at another chart, or here, let's actually pull up this. Yeah, this is also another way of looking at volatility compression. We can see the volatility is compressing because for 12 days we've been trading inside of this day's range. So we know that volatility is very much compressing. In order to see it, we're probably going to have to drop down in time frame to the 4-hour, where you can really see how Bitcoin was extremely volatile, having these very large price ranges. And then now, once we pulled back from that very, very volatile range, you can see just how compressed this range has been. Yesterday had a nice move to the upside. We actually thought we were going to resolve this range or potentially get back above the midpoint of January's range, which in my opinion, that is where the resistance is coming into play here. As you can see, you've not been able to close a daily back above that level. And I don't want to just see a daily closed back above it. I would love to see like a 2-week candle closure back above it, as that would be suggestive of upside continuation. But the more time we spend under it, the more the bears are going to jump on it. Just think about that. How many days in a row have you had a sell signal? 12. And the bears have not been able to get anything going. That's true, but the bulls haven't neither. So anybody that has a bearish bias is obviously going to be looking to short Bitcoin, as long as it is unable to get back above and have bullish continuation above last month's midpoint, as we are getting on into this monthly candles range, as today is the 15th of February. So you are more than halfway into February's range. But anyways, as you can see, very tight volatility compression here. The VIX is back under the 15 level. That would give more room to the bulls with the VIX going lower, with risk being up on highs. If the tech sector could get something going, I think Bitcoin would ultimately resolve this up in a bullish manner. But the signal is still a sell signal. There is no buy signal yet on the daily time frame. Now, when I say that, that's just using an indicator to generate a signal. I'm not saying that Bitcoin is bearish or weak. It's just it has been all this month. It has been a very tight range for this month. I would love to see that range resolve to the upside, obviously, because I still hold HODL bags on Bitcoin, and it is trading right now in a manner that is going to annoy both the bulls and the bears. So this is actually working out great for premium sellers and vol sellers. Price is still in a sell signal based on the 21 exponential. The 21 exponential is more for your near-term traders, and you're under it. So As long as you're under your 21 and under the 50, then bears have a sell signal. All right. They're just taking profits much quicker because of this very tight range. All right, let's go ahead and check out. Well, let's first go speak on Ethereum real fast, because Ethereum is bearish. Ethereum is a lot more bearish than Bitcoin. Ethereum is down almost 20% from the yearly open. But I mean, if you go from the highs that were put in up here, you're down a lot more than 20%. Ethereum looks bearish. If I was a bearish only trader, then I would be over here on Ethereum looking for downside continuation. You're down on the year, and it provided an absolute phenomenal sell. We go look at the hourly here. You can see where I have drawn that arrow. I mean, this was an obvious, clear, perfect signal. You got back above the yearly opening range on a daily basis, on an intraday basis, but was unable to close back above it. Right here is when you opened a new daily candle, and then the very next hour you retested the yearly opening, and essentially that is where the sellers destroyed this thing. Now, obviously, if Bitcoin becomes bullish again, Ethereum could as well. Right? I mean, we know that these things can fly, but with the fact that Bitcoin is showing a little bit of weakness in the face of strong S&P and strong NASDAQ, the fact that you have a lot of cryptos, kind of crapping the bed right now, these are all reasons why you're seeing the sellers show up. Basically, since we're in the volatility compression, what we're doing inside of my Discord is we're just scalping it, because even though the volatility is compressing and the ranges aren't very big, they are still big enough to make decent profit returns, because you're getting more than a 1% move almost on a daily basis. And when you're up at these kind of price levels, a 1% move is a pretty big range. That's it's $1,000, and there's a lot of money to be made inside of an asset class that is moving $1,000 per day. If it wants to start trending soon, then we will be trading it in the direction that it chooses. As of right now, that direction is more down than up, but you are bullish on the year. Let's go ahead and look at the S&P. Your expected move high on the S&P 500 this week is going to be, it's a $72 expected move. $72 is a very small range. All right, so 61.86 is the expected range high. And then your expected range low is going to be 60.42. Now, CPI was a miss. Higher inflation is here, and gold is obviously ripping. You have that scenario going on, but seeing how the markets are positioned right here, it doesn't look like that anybody is really concerned that inflation is going to kick back up in any massive, meaningful way. But that's as of right now. But nonetheless, I mean, you're trading at all-time highs. This is your all-time high day close here. This is your all-time high, and you came just short of breaking that yesterday. For me, if I thought that this asset class was like really bearish, then I do not think that you would need to run the highs, which we did here when we broke back above the trend line. Remember, all of this price action here, everybody was super bearish. We have broken back out. We have consolidated above the downtrend, and we are resolving that range back to the upside, and still everybody is really bearish, right? This is not a liquidation run. You have an accumulation happening above the downtrend. So this is probably going to break out to the upside. So here's the XLK, which is the tech sector. Same scenario. You broke down, you created a downtrend, and then that downtrend just could not hold. Here would have been that downtrend. Now you have consolidated for quite a long time now above the downtrend. I wouldn't be so bearish up here, right? I would probably be more bullish based on the way price has consolidated above that downtrending line. So that's pretty much where you're at on the S&Ps. The NASDAQ looking very, very strong, looking like it has made fresh all-time highs. So we ultimately did not get a liquidity run on the NASDAQ yet. So the S&P, you have gotten that liquidity run, and a liquidity run for new traders is simple. It's just when you run above an old swing high, and then reverse. It's called a liquidation break scenario, where you liquidate the highs and then you break and move in the opposite direction. It is generally a pretty good bearish signal for at least a couple days. The main problem with trying to stay bearish, the S&P 500, is because of passive investing. Every single week that goes by, you have new volumes coming in every single week based on passive investing, based on employees putting money into their 401ks and whatnot. So that's always going to put a lift under the markets. Solana is bearish. It's down 34% from the all-time highs. You're not bearish on the year just yet. This does look like this thing is getting ready to break down and start to become bearish, or start to have bearish momentum. Looking at the way price has been playing out, it does look like the bears are in more control of this asset than the bulls are. But with that being said, if these sells are just being soaked up, then eventually you're probably going to get a rip your face off rally. It is a good sign that you're holding that yearly opening range, but the fact remains, I mean, you're on the daily, you have a sell signal. You do not have a sell signal just yet on the weekly, but I mean, what does it matter? You're already down almost 40%. You've already lost a huge chunk of your gains. If you are holding this long, I hope you guys are taking profits. It's just, that's what you have to do in order to make it in this game. You can't just sit and hold these things and hope they make you rich. That is not usually how it works. There are a few people that have gotten rich, but the majority have not. So obviously breaking out and not getting a weekly close above the all-time high was concerning. And then the fact that you've given almost all of those gains back is also concerning. All right, so here we are on the dollar. Basically, I said last week when I did the video, which was on this day right here, I said this is okay still. It looks good. I still want to be bearish the dollar. I am still holding bearish dollar positions, and the dollar gave once again, one of the cleanest sell signals I have seen recently. And it happened when we got the news on Wednesday. 8:30 is when the CPI data was released. We got an obvious spike on that news and tested the yearly opening range. Absolutely perfect. If you are not involved in dollar short positions, that would have been the time to put on a trade. All right. Now, you could have done that via Aussie, Euro, or USD yen. There are many ways you could have shorted the dollar, but I would have definitely been, if I wasn't in the dollar short trade already, I would have got in right here. And I did post this on Twitter. All right. So if you are not short the dollar, you've known that I want to be short dollar moving forward, because I think the Fed's plan will ultimately work given enough time. Ultimately, it'll start to work. And if it does start to work, then I want to be holding short dollar, because if the Fed can cut interest rates, that's going to be more bearish for the dollar than bullish. There was an absolute clean, perfect signal. And right here is when I posted it. You can see that I posted it here on Feb 12. DXY and Euro USD both testing their yearly opening ranges. Here is that boom, beautiful test there. So here it is right here. This is the breakdown of that yearly opening range. But this wick low right here is where the dollar tested its yearly opening range. So that would have been the ultimate long entry. You would have just essentially got long here, because even though you're under the yearly opening range on Euro, the signal isn't coming from the Euro. You're not taking the signal based on the Euro. You're taking the signal that the dollar is giving. And the signal the dollar is giving is simple. It's under its yearly opening range and it rejected right at it. That would have been a perfect long entry. Even if you would not have gotten long here, you could have simply gotten long here and managed your risk by this low. If you would have done that, you would be up here now, and that is a pretty nice move on the Euro. It's 138 pips. That's a successful trade, whether it's a day trade, whether it's a swing trade. Only time will tell if my dollar bias is correct. But right now, I mean, it looks better than it did down here. I'm long from here, right here at this blue line. So obviously my position was threatened. when we traded back down here. But this week, boom, there we go. So if we are going to see a trend change, because this is clearly trending down, then it might take a lot of time for that to take place. And so far it looks good now, or it's starting to look better. The fact that we closed this week above last week's high is good. If you want to short it because you think my bias is wrong, you can let me know in the comment section if you think my bias is wrong. But if you want to short it, I mean, you don't really have a sell signal there, but what you could do is you could wait for a potential liquidation above this wick, and then you would want to see a rejection. If you get that, then that could be a good spot to manage risk from if you want to be short the euro. But for me and my positioning, this looks good. This is what I want to see take place. I want to see price moving away from my entry, as that allows me to know that my near-term bias, or longer-term bias even, potentially is correct, but only time will tell. All right, so let's go back and look. We'll look at the bonds. There's nothing really to look at on the ratios because they are all still structured bullish. Here is your 30-year. Big move to the upside. Let's go look at it on a daily so you can see just what's taking place here. Big fake out move to the upside, and then 2 days of rejection. Boom, boom. This is what Wednesday looked like. It looked dangerous, right? It made everybody nervous. The Fed's going to have to start cutting rate or start hiking rates now. They can't cut. Yeah, this is why you don't get ahead of yourself. This is why it's better to just keep a longer term view and not worry about intraday spikes or daily spikes, because obviously the next 2 days showed what actually took place here. So the bond buyers obviously got involved on this on Wednesday. Here it is. You come back in, break out above yearly opening range, back in, throw in a nice little bear trap here at the yearly opening range, and up you go. And then here's the 10-year. There's your downtrend. Here was your breakout. Like I said, this could potentially be putting in a trap. Now, it didn't look like it was going to reject on this day. When this closed, it did not look great. The very next day's close looked really good. And the fact that we took out that low was also important. So now what I want to see moving forward is I want to see one time framing take place to the downside here. I want to see these highs on the red candles maintained. So when we open next week, I don't want to see wicks or closes back above. I want to see us get a nice trending movement away from this trend line. Show us that everybody was on the wrong side of the markets here while we remained on the right side. Now on the more near-term 2-year asset that I've been telling you to watch, it hasn't been as good. Obviously this thing is struggling and you're back under the yearly opening range. This is Wednesday. It didn't look great, but yesterday we did ultimately get back up there and take out that high, which is good. This is what I want to see. So moving forward on the 2-year, I want to see the bonds be able to protect Friday's low. I don't want to see us lose Friday's low, because if we lose Friday's low, then that means Thursday's low is going to be a potential target. All right. And I don't want to see that. I want to see this starting to move back in the up direction the right way. And if that takes place, then obviously we will have the right bias on the near or the longer term dollar short positions. And ultimately, whether or not Bitcoin will react in a bullish manner based on all of this more macro thesis, I don't know. Obviously, I can't tell you what Bitcoin is going to do. I can't see into the future. Obviously, my more macro bias of bearish dollar is better suited for bullish Bitcoin, but that does not mean that Bitcoin will act bullish, okay? The tech sector remains bullish, then honestly, I believe Bitcoin will too, because Bitcoin is the most risky of risk assets, but we don't know, right? Obviously, we don't know what Bitcoin's going to do, but if the macro suits bullish risk assets, then I want to be more bullishly biased on Bitcoin. This is a perpetual swap contract for Bitcoin. I use weeks. If you want to use weeks, if you want to trade on their platform, they offer as high as 300x leverage. Here is the platform here. You can see that on the very near term, I do have a long trade on. Basically, I bought this yesterday. We got in Bitcoin long yesterday. Then we got some news that came out. Bitcoin reversed, went down and set a fresh daily low. And on that fresh daily low print, we got bullish, looking for Bitcoin to slowly migrate back up, and that's exactly what took place. So I took profits up here. I basically had my profit target set right here at these highs. You can see that here. I have realized gains of 871. I generally want to pull my profits off of exchange, right? I don't want to keep a big amount of money on exchange. Trade smart. You can absolutely do that. You can see here is a leverage slider. You can go all the way up to 300x. Would I trade with 300x leverage? No, I don't trade with anything more than 40x leverage. 40x is very, very hard to manage risk. But if you want to trade with weeks, you can. There's a link in the description of all my videos. If you don't know where the description is, 85, it's right here. Just click this where it says more. And then here are all the links. This is for the week's exchange. And there's all the relevant links if you didn't know how to get there. But that's the week's platform. Please, if you do use the week's platform, only keep money that you're willing to lose on exchange. It's an offshore exchange, okay? I generally like to try to pull my money off when I get above $10,000. But whatever you put on exchange, you have to be willing to lose all of it. I don't know the owners of this company or anything like that. Trading crypto is very, very risky, guys. All right. It is the most risky form of trading that you can take part in. But if you want to trade, there you go. There's a link in the description, right? If this does not start to get in line and do what we want it to do and start to print bearish candles that look good, like that do something like this, right? If we don't start to see that soon, then obviously my bias will change. Thank you guys so much for being here. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.